If we continue our analysis into oil and gas, but look at exploration and production rather than integrated, we can continue to diversify further within that sector, but in different areas of that sector. We can see here a list of quite a few names that have pretty strong quant racing ratings. So let's take a look at them and see which ones could be potential candidates for investing. Straight away at the top, we've got Obsidian Energy, a buy rating from independent analysts, a buy rating from Wall Street analysts, and the quant is giving a very high buy rating. From a valuation point of view, at 9.8, it's attractive. It has a very strong valuation metric. Its growth slowed down from 6 months ago, but is still average. Profitability has slightly improved from 3 months ago, and the trend and momentum of the stock is starting to pick up, whilst analyst revisions have been very strong. We can see that there is a lot of good things happening, like reducing the debt. So there's a lot of positive potential outlook for the stock. And we've had previous highs trading as high as 13 a share and more recently 11 a share, currently trading at 5.84 per share. So again, with an increase in energy prices or an increase in favorable conditions, we can definitely see that there's a good opportunity within a stock like this. If we look at the Wall Street analysts, we can see what they're expecting from the stock. And at the moment, over the next 12 months, the expectation is for around a 23% upside. But that could increase significantly if the price of oil increases, which would obviously be beneficial for them. So this is definitely a stock I would consider adding to the portfolio. But before we do that, let's look at some of the other options. Bonterra Energy. Bonterra Energy is having a good valuation, although it doesn't have a positive future PE ratio. That kind of concerns me. But apart from that, we can see, again, opportunity here and quite a discounted value proposition for opportunity here. We have Wall Street analysts with an expectation that this could reach. So when we look a little bit deeper into Bonterra Energy, we can see that it's trading around 60% below the estimate of its fair value, which is quite significant. It's trading at very good value compared to the peers in the industry. And analysts are in agreement that stock price will rise by around 57.2%. At the moment, though, the company is not profitable. So although it looks like good value, it's not making money. However, as soon as oil prices start to increase, that could obviously lead it to become profitable, which would have a big acceleration in the stock price. And compared to their revenue, their losses are very, very thin, which could easily tip into profit with an increasing oil price. So as we see here, estimated fair value is actually around $8 a share. So obviously more than double, almost 3 times the current share price. And we have a very attractive price to sales ratio of just 0.5 times, which is much lower than the average, with the average being around 1.9 times compared to its peers. So this is definitely a stock I would consider, but the fact that it's not profitable yet gives it a bad mark, I would say. But maybe if we were giving it a rating, it would be a 4 out of 5 or an 8 out of 10 rather than a 10 out of 10. But still something to consider, something of really good value that we could consider to add within the portfolio as a bit of diversification. But comparing the two, I would definitely have I'd have to be inclined that my favorite out of these two would definitely at the moment be Obsidian Energy. But let's take a look at some of the others. Baytex Energy Corporation. Baytex Energy, again, strong independent analyst buy rating from Wall Street analysts, decent valuation, okay growth, decent profitability, or slightly reducing, increase in stock momentum. But what we've seen here is it's been flat. It's starting to move in the right direction. We haven't really seen an acceleration yet, but that's a good thing, because if we did see an acceleration, we would have missed out on opportunity for appreciation. Trading at 14 times earnings isn't really cheap, but I wouldn't consider it expensive. That's forward earnings. And we can see a lot of good information about the stock itself and positive direction on this stock. So this is definitely one I'd like to consider, because I think there is a lot of potential behind this stock. We can see for Baytex Energy as well, from a chart perspective, that we were in a negative trend, but that negative trend has been broken, and we're now looking at what seems to be a much more attractive positive trends with lower lows and lower highs being formed. So this is definitely something that is compelling from a technical basis and a value basis. On the value basis, if we look at Baytex Energy, we can see that the current price to earnings, not the forward price to earnings, is only 6.45, and they pay a 2.9% cash dividend. So this is something that I would definitely rank as a good potential for a buy. Next on our list, we have Vitesse Energy. If we take a look at Vitesse Energy, we see decent valuation on the ranking, but not as attractive in a forward PE ratio at 26 times. It's quite high. We have a okay growth situation. We have a good profitability situation. We have an improving momentum and good analyst revisions. Wall Street banking analysts have a target expectation that it's actually probably met the target expectation already. So at that price earnings, I wouldn't be inclined to invest. MAC Natural Resources is actually looking quite attractive. When we look at MAC Natural Resources, again, we see all the stuff we like. A really nice, attractive PE ratio, a very interesting dividend yield, a lot of good news in the press about what's happening and how the market is growing, both from Wall Street analysts and independent analysts. We see that Wall Street has an expected price increase of up to 52%. So we've got a lot of very strong factors behind here. Strong valuation, decent growth, decent profitability, decent momentum, good revisions by analysts, undervalued stock. This is definitely a stock that I would recommend in this sector. So this is when we look at like quant analysis. The quant analysis can bring us good ideas, but when we really use some intelligence around what we're seeing, we can see here that actually out of these let's say top 10 stocks, many of these stocks are actually not as attractive as they appear, but some of them are actually real diamonds. So that's basically how we would look at stocks and try and extract the best value within each sector. In summary, my favorite oil and gas exploration picks would be Obsidian Energy, MAC Natural Resources, and Baytex Energy Corporation. They combine attractive valuations, improving fundamentals, and they have strong analyst support. Together, they form a compelling basket of opportunities in a sector that continues to benefit from favorable energy market dynamics, and with an expectation of increased oil price in the future, we could see even further upside than what has been shown in the analysis today. If you would like to add these stocks to your portfolio, please feel free to reach out to us.